All right, Pedro Garcia, welcome to the show. This is DYOR Live here on the DYOR Media Network. This is a special market update episode, short, little, quick to the point episode. We haven't been on the air past couple days that much, so we thought we would come to you this morning, talk quickly about the markets, catch everybody up, and hope we all understand how this volatility in the market is creating havoc with certain groups in Wall Street, but it's enriching other groups in Wall Street, namely day traders and other people that take advantage of volatility. But that's not the point today. The point today is what's going on in the market and where do we see it going for the rest of the day, tomorrow, and this weekend. My co-host Pedro Garcia here is in the house as usual. Pedro, I think something's fallen in front of your camera. Maybe there's like at the top of the screen there or something. Anyway.
Oh, shoot.
There we go. Anyway, ladies and gentlemen, we got like I said, a quick show for you today, but we're going to get right into it without messing around and bring you a nice 20-minute update what's going on in the show. Pedro, what is going on in the markets right now?
Hey, man, markets are going great. They're absolutely amazing. So basically, long story short, and I want to reiterate what we talked about this. I don't make this really simple and what is happening and why we're playing here. So we talked about the bond market coming down, going up, okay, and then coming back down to go up. And the reason why that is, and we've talked about this in previous episodes, where whenever you have a dollar and you're trading it around the world, that dollar can't normally go into like your own. Like if I'm Japan and I'm trading with America, basically, long story short, what most of the time happens is you take that dollar and like I have the yuan, I exchange it for dollars, okay? And so I can trade, let's say, with Indonesia, or I want to trade with America, right? Because I now have a dollar. And everybody wants to use that dollar because it is the medium of exchange.
Right.
Simple, okay? It's world currency, but that just confuses people. So I want to say it's a medium of exchange. So that medium of exchange then goes to another country and they receive it. And then they pay us or they pay Japan and dollar too as well. Okay. And most people want to hold dollars literally because one, you can quickly exchange and do trade. But also the US also gives a thing called interest on that dollar. So you can put it back either into the United States or buy a bond. Not or, but it can't, or it's one and the same, right? It's a you want to take interest off that dollar. So that interest then goes in to the US cofferdams into the treasury for dollars. Or excuse me, for interest. So dollar, US bond, interest off that dollar. Thank you. I mean, loading income while I'm holding for my next trades or trades. And if you're a large corporation, a lot of times this is what you do. Okay. Now, whenever there's a slowdown in trade, well, what happens? People don't need dollars as much. And when you don't need its dollars, now it's going to be a little bit complicated, but it's not. It's whenever interest rates and bonds are inverse of each other. Okay. Inverse means they're just opposite. And so whenever the US bonds go up, treasuries go down typically. And whenever US Treasury bonds go down, interest rates go up. So it's like this. Okay. That's how it works. And it's a fine balance, and we've seen this. Now there's a slowdown in trade going right now. So you have a drop in bonds, which is an increase in interest. Now, there are a few hedge funds around the world that have done a thing. We've talked about the carry trade here,
From
right?
Japan.
With Japan. And there are some, you basically buy or you get loans from Japan, okay? And that loans then comes over to me, because I take it, let's say give me a country. I'm Australia. Okay. And I go over to Japan and I say, hey, loan me $1 billion. They say, okay, boom, here you go. Interest rate. You're going to have to pay us back with that money because we're loaning you is 0.5%. It's less than
Really
a
low.
percent.
Very low.
Really, really low. So what do? I go to the most strongest, most powerful nation in the world, and I go, oh, and let's say I'm a hedge fund, okay? I'm a hedge fund in Australia. I take that money and I go, oh, I'm going to now put it over here in America where I can actually make more money, okay, off
Right.
of that interest, just naturally, right?
So to sum it up, they borrowed money from Japan at 0.5 interest rate, invested in U.S. bonds, and make 5% or whatever the
Yeah,
yield is.
it's really that simple, guys.
It's like free
And then
money.
from Yeah, it's basically free money, and then they make money. So a lot of hedge funds have done this, a lot of stuff. Well, right now there is a what do you call a kerfuffle or what do you call it?
Kerfluffle?
Kerfluffle, kerfluffle. Right now there's a kerfluffle going on where there is literally kind of trying to because interest rates and bonds are kind of being restructured again back to normal in a sense, right? In essence, and now we're actually like America's actually trying to get built in a way where we don't have our war material being built by China,
All right. Well, I
who is
think we're
our
a little
enemy.
too deep into the topic
I'm sorry. Okay,
for,
yeah, yeah.
for,
So let's talk
for
about
this
the
show.
market.
But for the viewers, we brought this up. We're trying to understand why, in certain circumstances, yields on bonds going up were not terrible for the economy. And the summarizes the reason
Well,
is that it draws in money into the United States from outside influence, outside sources to buy our bonds and to help fund our government.
yes, but now that our government's trying to get funded literally by tariffs, okay, and get away from taxing its people, it's a restructuring of the ecosystem and then establishing a new base of um, intra-national trade. And in that intra-national trade, you then actually have a real value for value reciprocal or proportional trade. That's correct. And
Right.
so what happens, and this is what Bassett um, is
Besant.
Besant. Dang it, Besant is really really fine. This is kind of a genius plan because here's the thing. Granted, we're gonna have to we've talked about this also, that we're gonna have to restructure the debt here real soon. It's coming up in October and also at the end of the year. It's just some stuff's coming that we gotta restructure. It's gonna be between six to $10 trillion that we're gonna actually have to go through and take care of certain things. And so what's interesting is that as this is happening and as we're moving forward, we're going to see a sorry, someone just hit me up. I forgot. I know. I need to set this up where I don't get taxes that aren't that. So, long story short, what we're seeing is in a world where we've what's going on. Like it's just what's happening. We're getting a restructure of things, and
All
I
right.
think what's really important is
All
that
right. Well, hold on.
understanding that
We need to move on with this topic. Welcome
well,
to the
this
house,
this,
Chuck
this
Jansen.
includes everything else. So Stan, and I don't want to move quick, so I just need to talk about this. The 10-year bond, okay, yield went up, but it's coming down. Look, we went up. See all the sellers coming in? Seller wick, right? Big seller wicks. They're coming down. Why are they coming down? They're coming down. We talked about how this area right here was the line in the sand where we would then see the sell off down to the three. Remember we talked about this? I said this is the line in the sand, the purple line in the sand. And this purple line in the sand was communicating that if we drop below this low here, we were going to come down to that 3.86 area. Okay, this was the area, or potentially even lower. We talked about that 2.618 area. Well, guess what? We came back, test this, and we came back up, bounce off of it, but we're coming down again. Interest rates are coming down. Again, you can see it in the actual system or in the actual charts. And additionally to that, we're watching short term and long term kind of restructure things again, right? Where we're seeing like here's from 10-year, right? Boom. It's a part of the yield curve here. I mean, I'm trying to figure out words that our people will understand. Part of the group of bonds and yields that interact with each other. there can be a kind of like a messed up system that happens between the two. And so they're starting to come back to normal again as we're starting to play here. But on a real fundamental, strong basis system that basically is that's being restructured around the world. That's literally what Besant is trying to do. So there we go. All right. So you can see here that the 10-year yield is coming down. This is important to understand. And additionally to that, we're also watching, shockingly, right, that the 10-year bond is starting to go back up, right? So we saw bonds sell off big time, boom, and now, excuse me, that's the 2-year. My bad. All right, we saw that, but this is important. If you look at the chart, you'll see we're going up. It was just a pullback, traders. Look, went up. And I remember we marked out this area here that we're going to do some lower or higher highs, but also lower lows. But it's going, remember that this yellow mark here, right, was a basing period that we're going to see go all the way up, remember, to here. This was our target. Right. And I drew this out, said, all right, guys, look, we should see some consolidation happening here, this sideways pattern, before we really kind of get a good base, before traders get a good base and shoot it up for your bonds. Right. So that's the other part. So there. Then the Dixie. So we talk about, and we've talked about this out multiple times. Now, if you're a traveler outside of the United States and you spend a lot of money, I said, you should probably go out before the dollar drops. This was at the beginning of the year. Remember with Trump? And we said we were going to short and come all the way down to the 99. I said it was about around the $199 area. Really important to understand. The reason why we need that is because we need a cheap dollar so we can produce, so that we are advantageous for the rest of the world to want to do business with us. That's it in a nutshell. Keep it very simple. Okay. And then from there, as it comes down, we want to see crude oil also, because it's kind of parallel to what crude oil does at times to the petrodollar. Okay. We want to see the petrodollar come all the way down to that 55.45 area, and then see it consolidate here so that it can make U.S. oil competitive with the rest of the world.
Great again. Make oil great again.
In a sense, yes and no, but that's in a nutshell what Besant was trying to do. So a lot of this stuff is a genius. We talked about gold hitting 3,300. Yesterday we saw 3,300 hit. Okay, we called it down here at the beginning of the year, back in December and January, right? Because all the turmoil that's going to happen. And again, I didn't go into all the fundamental details here, but this was really whenever there's any type of real stability in the market, even a little, can throw things off. But the reality is, we knew that gold was going to go up, and we talked about silver, the silver play, right? Silver play to expect it to hit this area up in here of that 37 to 35 area, right? Now, it came close, is sold off. We talked about the fundamental structure of silver and gold ratio. We're not going to go back into that, but gold sold off, hit our area, and bounced off the 400, and now again is starting to go sideways, kind of push. And this is, I talked about, I don't know if they're really going to let it happen, because gold to silver ratio, if it goes to there, it's going to make doing business with computers as well as many other products that we use, especially Lululemon. When we talk about the Lululemon things, right? Or what do you call this?
Yeah, the antibacterial use of silver.
Exactly. So that's one of the things that you can see what is actually happening here. I don't think they're going to allow it, because there's too much money with keeping silver low, and a lot of the world uses it. So I think it's going to stay here. Anyway, so I don't even know why I did that. Boom. All right, next, let's check out crude oil. Not crude oil. We talked about crude oil. Boom, boom, boom. The micros, or not the micros, excuse me, the NVIDIA and many of these other stocks, you can see here that they did start to see the sell-off, saw the bounce back, but now they're starting to sell off again. This is an indication of potential move that the market is, like I said, there's a sell-off, a reprieve, and then another sell-off. So you have leg downs and pullbacks, right? A
Are you looking at an
continuation.
index or is that NVIDIA itself?
This is NVIDIA.
It's down to 100 and some?
Yeah. Well, we already talked about this, guys. Remember when it gapped up all the way to 150, 153? And I said, we expected to come to, remember we had a zone right here? This was the first zone. It was around 102, 103. We took it off because it sold through it. And I said, the next area is that 77 area, right? We talked about that because it's a
Right.
simple,
I'm sorry,
it's,
I'm trying to figure out why I thought their share price was up in the 400s for some reason.
no, it was. They split. I believe they had
that's right. That's right.
was it a 10? Yeah, it was a 10 to 1. I was going to say 10 to 1. It was a 10 to 1 ratio. So they split. So like this was actually like 1,500, and actually I think the split happened
Just
sooner.
as a question about splits, when a company splits its stock, do your charts automatically update or do you got to redo them from scratch?
No, actually for this stuff, I actually they just automatically do it. Like most, I don't got to sit there.
Where you have your lines and all that type of stuff, it updates them, or is it?
Yeah.
You got. Wow.
No, it does. It's actually really interesting. So they do a great job.
We got about 5 minutes here.
Okay, yeah. So you understand there's all these, I'm just going to go through this here quick. Look at Google, sell off. Boom. It's coming to our areas. Boom. Amazon, boom. Coming to our area. Boom. Apple, coming to an area. Boom. Right? Like, granted, it may overstop us, but it's pretty strong. Same thing with Tesla. Boom. Sell off. Now, Meta got in trouble and some stuff leaked out on them. Right? And so I think we're going to see a really good descend of Meta. And I'm going to buy Meta because, well, I want to buy more down in these lower levels. So I think we're coming down to there with them. Let's check out here. We're going to BTC. BTC, again, I said there's a parity to it between the NASDAQ and the stock and between Bitcoin and the NASDAQ. And these areas here are really important to pay attention. My biggest thing that I want to see, and this is where I'm looking for it, is we're starting to see a little bit of a breakaway, though, which is really interesting. I didn't expect this. So I might have to rechange my hypothesis on where I expect Bitcoin to go. But it's still not necessarily detached from the move. You can see Bitcoin or the NASDAQ is selling off. Right here, you can see where we saw the sell-off, whereas Bitcoin has held pretty steady. Okay, you can see it's held pretty steady in this tight range here.
Interesting.
So where Bitcoin went up, or the NASDAQ went up, then came down.
Well, this to me, at the broadest level, it says to me that a few people, meaning a few larger multi-billion-dollar hedge funds, may have moved a little bit of money out of NASCAR, out of NASDAQ, and into Bitcoin.
Potentially, yeah.
I mean, that's one of 10,000 possible reasons. But in my mind, if NASDAQ's sinking and Bitcoin holds, the theory that Bitcoin is the store of value comes roaring back to life after being dead for a couple of months here, and maybe we see maybe we see a further price divergence between the two. That would send the traders into, oh my god, if that spread moved a lot, there would be blood in the markets from the guys at Arbit, just thinking that it's always going to stay in that 3-to-1 range.
Well, it's interesting to see because I feel like Bitcoin, it's still in that 3-to-1 ratio. But what we're seeing though is this a stability to the downside potentially. The fact is that Mr. Saylor again topped off, and we saw the sell off on Monday or Tuesday. It shows me like there's still, like, anytime you have major market manipulators in that sense that just come out and try to manipulate the populace, they do go after them. So right now, sorry, if we stay, everything is just bothering me. I'm sorry. All right, that's just gross. Sorry about that. All right,
I
we're
had
good.
you off camera, thankfully.
All right, cool. It kept tickling me, and I just couldn't. You could hear like so. This idea is this real simple. The 8 and 20 did cross here. We talked about how that's a good thing, but it's not really trending. We're not seeing a lot of volume here as we're moving up. And even in the volume going in the green volume, we see what's the primary thing you see up here right now? We see seller wicks, right? Look at all the seller
Right.
wicks. So the big seller wick here. So again, I can't get in on this, even though we do have some bullish sentiment here on the upside with what's going on in the world and what's actually happening. It's just not positive right now. We talked about Trump literally has 6 months to a year to get jobs back here, to remove red tape, and to allow for small business growth acceleration. He's got to do that. He has to do that. If he doesn't do that, then it is it's all for naught. It is literally all for naught. And we'll go back to America being in debt. And within 10 to 15 years, the US debt to income ratio, GDP, will be 200%, and the rest of the world be. And we're
All right,
gone.
Pedro,
done.
in 30 seconds or less, the market is not tanking anymore. It seems to have taken all of the tariff information into it. How do you expect this week to close here?
Yeah. I see the market coming back down. We'll probably in red this week. And I see it's really kind of coming back down to either that 2,500, or excuse me, 5,200, or potentially coming back down to the lows of the 5,000 area. So
in the S&P 500.
Yeah, on the S&P 500. Yep, S&P 500. And I see a similar situation happening with the NASDAQ. You can see already that the NASDAQ is weaker. And so we can see, and that's primarily because what we talked about here with the Magnificent Seven here. And so you can see here that as those go down, it will drag the NASDAQ, which will drag S&P 500.
All right, ladies and gentlemen, that's all we got for you today. A little quick hit market update from DYOR Live from myself, Tom, otherwise known as Striking, here in the digital media world. My co-host Pedro Garcia. This is a quick hit. You'll see a bunch of these the next couple of weeks as we try out new formats to keep everyone engaged here. But anyway, thanks for joining. I'll play the outro, but it's too loud for everyone.
Hey, man, how many did we get, by the way?
I don't have any idea yet. Anyway, ladies and gentlemen, thanks for joining us. Really appreciate it. Hopefully we'll see you tomorrow.